Hey everyone, welcome back to Corporate Decoder. In this episode, we're diving into a company called Edgemode, and let me tell you, their financial report is a bit like a roller coaster, but instead of thrills, it's mostly downhill. Get ready for some twists, turns, and maybe even a little head scratching. So, what's the story? Edgemode filed a Form 10Q, which is a quarterly report companies must submit to the SEC. But this isn't just any quarterly report, it's an amended report, meaning they had to fix some mistakes from their previous filings. It involves restatements of their financial statements from earlier in 2023. Buckle up, we're going in. Okay, so why the restatement? Basically, they messed up on some stock options they granted to a consultant. It wasn't properly accounted for in their previous reports, which led to understated expenses. Think of it like forgetting to add an ingredient in a recipe. It changes the whole dish, and in this case, their financial picture. More specifically, it seems they forgot to factor in 5 million stock options given to a consultant. The value of those options at the time was around $230,000. Failing to include this expense made their earlier profits look a little better than they actually were. This restatement impacts a few key areas of the financial report, including the financial statements themselves and what's called management's discussion and analysis, which is where the company explains its performance. So it's not just a minor correction, it's fairly significant. If you want all the nitty-gritty details, the report points you to Note 2 in the financial statements. This note breaks down exactly how the restatement changed the numbers. Also, it looks like their top executives had to re-certify the report, basically vouching for its accuracy after these changes. And here's where things get a little concerning. Edgemode admits they had some weaknesses in their internal controls. This means they didn't have enough checks and balances in place to catch these errors the first time around. They specifically mention issues with reviewing the financial closing process and a lack of clear policies around related party transactions. Now let's get into the actual numbers from the report. We'll be looking at the balance sheets, income statements, and cash flow statements. These are the core financial reports that tell us how the company is doing. Starting with the balance sheets, which show what the company owns and owes. As of June 30th, 2024, Edgemode had very little cash, only $376 to be exact, up slightly from the end of last year. They also had a little over $1,000 in prepaid expenses and other current assets. Their total assets just under $2,000. On the other side, their debts are substantial, which is a problem when they hold minimal cryptocurrency assets. They owe a lot more than they own. Their total current liabilities are nearly $4 million. This includes things like accounts payable, accrued expenses, accrued payroll, equipment notes, convertible notes, and derivative liabilities. Because of these debts, Edgemode has a stockholders deficit of nearly $4 million. This means their liabilities outweigh their assets. Not a great position to be in. Moving on to the income statements, which show how much money the company made or lost. For the 3 months ending in June, Edgemode had operating expenses of around $385,000. Almost all of it was for general and administrative expenses. Then they have these other items called other expense and change in fair value of derivatives, which cost them even more. After all that, they ended up with a net loss of over $315,000 for the quarter. When you break that down per share of stock, it comes out to a loss of practically nothing per share. The statement of stockholders' equity just reinforces the balance sheet. The company is not making profit, has very minimal shares being traded, and is accruing significantly negative equity for its shareholders. For the 6-month period, the net loss totaled over $766,000. Looking at the cash flow statements, which track the movement of cash in and out of the company, Edgemode used very little cash in operating activities. They had a tiny gain from financing because of a loan they took out, and a very small amount used in investing. Overall, their cash position barely budged. On the cash flow statement, one of the biggest things to note is stock-based compensation. During the same period last year, stock-based compensation was over $1 million. The filing is big as required, and I have no intent to drag you through every little detail, so let's jump to note 3 to find out if any of the accounting policies and estimates are actually important. There are some new accounting rules coming down the pipeline, particularly around crypto assets and income tax disclosures. It's too early to say how these changes will specifically impact Edgemode, but they're on the company's radar. Now let's talk about something really serious going concern. This is basically accountant speak for, can this company stay in business? Edgemode admits there is substantial doubt about their ability to continue as a going concern. They haven't been profitable, they expect to keep losing money, and they need to find more funding. What's worse, management has no formal plan in place to address this concern. The only light on this is that the company states that they might seek out mergers, acquisitions, or other business combinations, but they also state accordingly investors should not place undue reliance on these efforts. Note 7, equity describes the Class A and B stock. Both the preferred stock and stock options are dilutive to common shareholders. They have hundreds of millions of stock options outstanding. On the legal front, there's an old dispute with a company called Taylor Black Wealth, where Taylor claims they are entitled to more stock, although it appears that both parties have not taken any action to resolve this for quite some time. After the quarter ended, Edgemode got a $275,000 refund related to equipment purchases. That's good, but it probably isn't enough to solve their bigger problems. And finally, let's review the section called Management's Discussion and Analysis. This is where management explains how the company performed, but it doesn't present any encouraging future paths. The business overview, for instance, states that Edgemode has been involved in many unsuccessful business ventures and has had to abandon. This does not speak well to the company's planning abilities. The company also requires significant debt financing to commence Bitcoin mining, with there being no assurance that it will be received. The board reports that there were no material changes to the company's internal control over financial reporting. However, keep in mind that they had to restate earlier financials due to a massive blunder which undermines this claim. Now, stepping back and looking at the overall picture, Edgemode faces some serious challenges. The fact that they had to restate their financials due to a material weakness is a red flag. The fact they have no plan to get capital and minimal assets is also of grave concern. The company also hasn't found a target company to be acquired yet, and so based on the report, there is no reason to invest. Edgemode doesn't have revenue, so traditional methods of valuation are worthless. However, the company is reporting approximately $1,776 in assets and roughly 390 million shares. As such, a highly speculative price might be somewhere in the range of $0.000004. Given the high risk and questionable outlook, my recommendation is firmly bearish and suggests a near zero price target. This analysis is for entertainment purposes only and is not financial advice. If you found this breakdown helpful, please subscribe for more corporate deep dives. Thanks for watching.